When is a stock undervalued? That is a very important question that I feel not enough people address. What's up everyone, my name is Ala and welcome to My World of Finance. Today we're going to be addressing that question. Think about it, if you have the awareness and capability to determine when a stock is undervalued, then you are much more likely to find a very good entry point and be a much more successful investor in the future. You will also be much less likely to make a mistake and invest in a stock that maybe you otherwise shouldn't be investing in. Now, some of this might be a little overwhelming for you if you're a beginner, but I think you'll find that if you just pay attention over time, these things will start to make a lot of sense in the future. Now, I'm going to make this video very short, to the point, and easy to understand so that you know exactly how to identify when a stock is undervalued. All right, now let's start with step one, which is actually the most obvious and very basic step, but we'll get a lot more advanced in just a second. But you'd be surprised at how many people skip this, and that is to find stocks in a sector or industry that you understand. All the time I see people investing in stocks based on hype, based on what other people are saying, without actually doing their own research and without even knowing what the company does and the type of business that they operate in. And so how can you determine if a stock is undervalued or if a company is undervalued if you don't even know the type of business and industry that they operate in? And we're going to talk about PE ratios in just a second, but do you think that every sector or industry will have very similar PE ratios? Probably not, because they operate differently. So you can't compare one company from one industry to another company in a different industry, because financially they'll be structured differently, and in terms of their business they will operate completely differently as well. So make sure you know a lot about the company and its business, make sure you know a lot about the industry that it operates in, and also make sure that you know a lot about its major competitors, because you can't really determine if a stock is undervalued without comparing it to something else. And so you want to compare the stock of the company that you're looking at with the stock of its major competitors. And so again, if you're a beginner, stick with an industry that you understand. In my case, I'm very good at understanding the tech sector, the gaming industry, and so a lot of times I'll invest in gaming stocks. It's worked out fantastically for me, and it's made it a lot easier for me to determine if these stocks were undervalued. It doesn't mean that I don't diversify. Of course, I invest in other sectors as well and other industries as well, but for the majority of my investing, and especially when I was first starting out in the stock market, I definitely stuck to a lot of tech stocks and a lot of gaming stocks that I understood very well. It made it a lot easier to determine if they were undervalued. All right, now in step two, we have to get a little more advanced. We're gonna start looking at some of the financials, some of the different ratios, a few different metrics. I'm gonna show you some metrics that will help you determine if a stock is actually undervalued. Now, some of this might be a little difficult for you if you're a beginner. You can watch this video a couple of times if that helps the information sink in. I'll also have a beginner video linked in the description where I talk about PE and PS ratios in a lot more depth. But anyway, let's just kind of run through these. I'll try to make it as beginner friendly as possible. Also, just remember that all of these metrics I'm going to show you are just one small piece of the giant puzzle. There are many ways to determine if a stock is undervalued, and it's not always just numbers. Okay, so analysts, a lot of times they will just look at numbers. A lot of times they don't even understand the industry. I invest in gaming stocks a lot because I feel like analysts don't really get the gaming industry. They don't really understand it. A lot of times they just look at numbers and they might not even play video games themselves, and they just try to predict what's gonna happen. And so a lot of times I feel like I can outperform the market because I can expect things that maybe other people aren't really expecting, maybe number crunchers aren't really expecting. So there's kind of a conceptual side to it, and then there's more of an analytical side to it, which is what we're going to cover now with all the metrics. Now, all of these metrics, all of these numbers I'm going to be throwing at you, you can get these numbers from almost any stock website out there. So you can go to like cnnmoney.com, nasdaq.com, marketwatch.com, that's just to name a few. But you can definitely get all these metrics in all of those kind of stock websites. All right, the first metric we're gonna look at is probably the most popular one, and that is the PE ratio, also known as the price to earnings ratio. You've probably heard a lot of people talk about it, but what all it is that it's the price per share of a stock divided by the earnings per share of a company. And the lower that number is, generally the stock is considered to be a little bit cheaper. And so you compare the PE ratio of one company and compare it to its competitors. And if yours has a lower PE ratio, then generally your stock is considered a better value, maybe a little cheaper because you're paying a lower price for better overall performance by the company. Although a stock can have a higher PE ratio, which may be an indication that investors are expecting more growth in the future, and so they're willing to pay more money now or just have a higher PE ratio because they're expecting more growth in the future. And so generally a lower PE ratio means it's more of a value stock, means it's probably a little cheaper. Okay, so generally considered a cheaper stock. And then a higher PE ratio, you're probably expecting more growth in the future. And that actually leads me to my second metric, which is the PEG, or price to earnings to growth ratio. And so if you have a stock that has a high PE ratio, but you're also expecting high growth, or many analysts are expecting, they're predicting high growth in the future, maybe in the next, 5 years or so, then you can calculate that into your PEG ratio to see if that high PE ratio is justified with high growth in the future. Now, in general, you want the PEG ratio to be less than 1, which would be an indication that the stock is cheaper or undervalued. But you have to remember that this is really a comparison tool. So when you're looking at two different stocks and one of them has a higher PE ratio, after you calculate its, the predictions for its future earnings growth, you may find that its PEG ratio is actually lower. And so then that stock might actually end up being a better investment than you originally thought. Now, you may also have a situation where a company is not profitable or they have negative earnings, maybe because they have really high operating expenses, or maybe they just have really horrible profit margins. Whatever the case is, maybe a PE ratio isn't as useful, and so then an investor can look at a PS ratio, and that's a price to sales ratio. And so there, you're just looking at the price per share of a stock divided by the sales or the revenue per share of a company, and then you have your PS ratio. And again, here you just want to have a lower number. A lower PS ratio generally means that the stock is cheaper or possibly undervalued. But even here, you also have to be careful with the PS ratio, because you're probably dealing with a company that is not profitable. And if they're not profitable, then how undervalued can they really be? It's more of a comparison tool. Okay, you want to look at the PS ratio between this company and other companies. Look at other companies that are also maybe not profitable, operating kind of similarly, and then determine, this one has a lower PS ratio, this one might be a better value. Okay, the next metric that we'll look at is the PB ratio, or the price to book ratio. And here we're taking the price per share and dividing it by the equity per share. And if that number is less than 1, then that means that we're paying a smaller price than the net assets of a company, which would generally indicate that we are getting good value for the price that we're paying. Okay, and lastly, I just want to cover a couple more metrics that have to do with the company's balance sheet, which can also give us great insight into the value of a stock. Now, when looking at the debt to equity ratio, we take the total debt of a company and we divide that by the equity, which is the assets minus the liabilities. And if we get a number that is less than 1, then we know that the company has more equity than debt, which is a great thing. And the lower that number is, the better. But if that number is higher, and even if it's over 1, then we know that the company has more debt than it does equity, which is not so great. And so then you have to ask yourself, is this really a value stock? There may be similar stocks out there with better balance sheets, with less debt and more equity, that would generally be considered a better value. Okay, and the last metric that we'll look at is the current ratio. And this is a little more simple, a lot more common with beginners. You just take the current assets and divide it by the current liabilities. You get your current ratio. And this just gives us an idea of how the company's balance sheet is doing in the short term right now, and how easily that company can pay off its short-term debt. Okay, so that's it for now. I hope you enjoyed this video. I hope I didn't make it too difficult for any beginners out there. If you need to watch this a couple times to let the information sink in, go ahead and do that. Also, leave any questions you have down below in the comment section, and hit the like button if you want to support the channel. So thank you so much for watching. I hope you all have a wonderful day, and you take care.